Hello people, you're welcome once again to our YouTube channel. Today we want to talk about how to trade the best supply and demand zones, the best supply and demand zones that you should trade, the best supply and demand zones to trade. Okay, so demand and supply zones are one of the best ways to trade the forex market. Identifying and trading demand and supply zones is one of the best way you can trade the forex market. In fact, one of the best strategies to use while trading the forex market is trading demand and supply zones. Before we continue, if you're yet to subscribe to this channel, please kindly do so and turn on the notification bell so you can be alerted when I post new videos. If you are a returning subscriber, thank you so much for your support. And also we have a Telegram channel whereby we post free chart analysis almost every day. The link to that Telegram channel is in the description box of this video. All right, so let's move straight into the subject of matter of today, which is how to trade the best supply and demand zones to trade from. The best supply and demand zones to trade from. First of all, what are demand and supply zones? A demand zone or area. A demand zone or area can also be called, some people call it bullish order blocks. Okay, that is, this demand zone is actually an area in the forex market or in a forex chart where you take buy trades, from. Okay, you take buy trades from demand zones, okay, or bullish order blocks. Just in a layman's language, is the area where you take buy trades from, or where there are buy orders, to trade from. Buy orders, where institutions have placed their buy orders to trade from. That is demand zone. While a supply zone is just like the opposite. Supply zones or area can also be called bearish order blocks. These are sell areas where institutions take their sell trades from, where they have massive sell orders placed. Is called the supply zones. And going to the types of supply zones, I'm just trying to do this introduction for those of you that are maybe new to the concept of demand and supply zone. Types of demand and supply zones. Okay, now we have the first one. We have rally base drop supply zone, and we have drop base drop supply zones. Now we also have, this is for supply zones. We also have, for the demand zone, we have drop base rally demand zones. We also have rally base rally demand zones. Okay, so these are the types of demand and supply zones we have, and I want to show you how they actually look like. I'm just doing this as an introduction for those of you that are new to the concept of demand and supply zone. This is a rally base this is rally base drop supply zone. This is the drop base drop supply zone, drop, base, drop, supply zone. This is for supply zone. Supply zone. Now for demand zone, we have drop, base, rally, demand zone, and rally, base, rally, base, rally, demand zone. All right, so these are the types of demand zones, demand and supply zone that we have. All right, so the probability of success in trading any demand and supply zone is based on some criteria, and I want to be sharing with you about 6 criteria that determine the strength of a demand and supply zones. 6 criteria that determine the strength of a demand and supply zone. When I say the strength, I mean the probability of success. 6 criteria that determine the probability that when you take a trade from a particular supply or demand zone, that the trade is going to work out. Okay, so to increase your win rate, it is always best to trade demand and supply zones with the best strength or the best probability of success. So you should avoid trading weak supply and demand zones. Not all demand and supply zones are worth trading from. Some have higher probability of success than others. So that is why I want to share with you right now what you should trade. The first thing you need to do is trade only rally based drop supply zone. Trade this instead of this. All right, when it comes to supply zone, preferably trade rally base drop supply zone. Avoid trading drop base drop supply zone. When it comes to demand zone, better to trade drop base rally supply demand zones instead of trading rally base rally supply zones. That is not to say that if you trade the drop base drop supply zone, it might not work sometime, it might work sometime, but the rally base drop is of higher strength and higher probability of success. That is not to say that if you trade the rally base rally supply zone, that is sometime might not work. It might work sometime, but the probability is lower compared to the drop base rally supply demand zone. So that is the number one thing you should trade. That is the number one thing that determines the strength or the probability of success of a demand and supply zone. All right, so we say the first one, trade rally base drop instead of trading drop base drop supply zones. Also trade drop base rally demand zone instead of trading rally base rally demand zone. All right, that is the first thing. So the second thing that will increase your probability of success while trading demand and supply zone is the amount of time that the candles spend on the base. The amount of time the candles spend on the base. Now let me give you an example let me show you short examples of what I'm actually talking about when I say rally base rally. All right, for example, now this is a drop base rally demand zone. Drop base rally demand zone. So there's a probability that if price comes here, it's going to actually do what? Buy. All right, so that is for drop base rally. Now for a supply zone, this is a rally base drop demand supply zone. So price could come here and sell. All right, so that is it. Now if I want to show you, let me show you a drop base drop. This is a drop base drop base drop supply zone. Okay, this is an example of a drop base drop supply zone. All right, so price could come up to this point and do what? And sell. So that is the example. Now let us look for example of a rally-based rally supply zone. Rally-based rally. Let me look for an example of. I just want to show you an example so you understand what I'm talking about. Now this is an example of rally-based demand zone. Okay, that's the example. So I'm sharing with you the criteria or the characteristics or the features of best demand and supply zones. And I said you should trade the drop based rally demand zone and the rally based drop supply zone. They have a higher probability of success than drop based drop supply zone and rally based rally supply zone. So that's the first one. So the second one is the amount of time. You need to take note of the amount of time. The amount of time spent at the zone. Okay, time spent at the zone. The greater the amount of time the zone, the base of a zone took to form, the lesser the probability of success of that demand or supply zone. All right, what do I mean? You see a zone, a demand supply zone like this, whereby this is a rally and the base like this, and this is a drop, base, and this is drop. Now this is a supply zone. But there are several candles. There are multiple candles on this base. This is the base. Several candles. Let's say there are 4 or 5 or more candles here. This is one. The second scenario is whereby you have price forming a rally-based drop supply zone. But here there are like few candles, like 3 or 2 candles at the base before the market drop. So this is a rally-based drop supply zone. This is scenario number 2. Here let's assume here you have 5 candles on the base. Here you have 3 candles on the base. And what about a situation whereby you come up, you have like 2 candles on the base? Okay, rally base drop. Okay, now which of these supply zones have the higher probability of success? The supply zone here that have the highest probability of success and strength is number 3. Why? Because there are fewer candles at the base. That is to say that the market spent a little time, lesser time at the base, and hence if price should come back, there's a higher probability that the market is going to sell from that zone. Here too, this is higher probability also than number 1. The more time price spent, the more candles formed at the base, the lesser the probability of success. For the flip case, you can see for the demand zone, multiple candle being formed at the base before the market rallied up. This is a drop base rally. All right, this is scenario number 1. And scenario number 2, you have maybe like 3 candles or few candles here and the market rallied up. This is scenario number 2. Scenario number 3, we have the market come down, just 2 candles or 1 candle at the base, okay, and the market rallied up. This is to say that this scenario number 3 has a higher probability of success. The market should come up, is expected to come down and mitigate the zone and buy up. All right, so it's better you go for zones whereby there are fewer candles at the base. Fewer candles. Let me show you an example of what I mean. Fewer candles at the base, like in this case. Now let's see this zone. Can you see this zone? This zone just have fewer candles at the base. Let's count 1, 2, 3, 4. Just 4 candles. All right, let us compare. You cannot compare it with a zone like this, a demand zone like this that has several candles. This 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Over 10 10 candles at this base. So this is like a drop base rally. All right, so this zone, the zone I showed you before, has a higher probability of success than this zone because there are multiple candles here. Market spent a lot of time on this base. So that is why this has a lower strength. That is a lower strength. This is a lower strength demand zone. All right, now can you compare it with this? Look at this supply zone. Look at this supply zone right here. You see how the market just created a few candles at this base. So this has a higher probability of success than if the market were to spend a lot of time at the base before it actually dropped. I don't know if you understand what I'm saying. All right, that is one criteria. We are talking about the criteria, things that makes a demand and supply zone to be strong, and of course has higher probability of success. The third thing is the strength. The criteria or property is the strength of the move away from the zone. All right, so why trying to determine the demand or supply, the right demand or supply zone to trade from? You should look at how did price. Ask yourself a question. The question should be how did price left the base of the zone? How did price left the zone? That is the question. So what do I mean? What I mean is, you have, let's use the supply zone as an example. You have candle. This is a candle. This is another candle. This is another candle. This is another candle. All right, now we have 3 candles at this base here. This is a rally and this is a base. And look at the supply, the drop. We have this candle right here. We have another candle right here. Another candle right here, like this. Let's say, yes, you have candle here. You have candle like this, like this. Now this is scenario number 1. This is a drop. Now scenario number 2, this is 3 candles. Now the market rallied up, and there are just 2 candles here at the base, and now the market now started forming overlapping candles. All right, so in this candle here, in this first scenario, how the market left, the market was actually retracing, moving and retracing before it actually moved. But in this case, the candles were overlapping, and no strength, no more strength, overlapping. Here you have overlap and retracement. Okay, in this scenario number 2, we have just overlapped candles. But in scenario number 1, in the scenario number 3 is the higher probability scenario, whereby you just have like 1 or even 2 candles, but the price left the zone so fast. The candles did not overlap, they just left so fast. The market just left so fast. The candles did not overlap in any way. The market just left so fast with a high. This is rally base drop with a high intensity. The market left the zone. This is the base of the zone. The market left with a high intensity. This scenario number 3 has higher chance of success if you should want to come and trade this from this zone, okay, and sell from this zone. The market has a higher probability of success. So that is it. This same case also is applicable for the demand zone. I just use the supply zone as an example. For the flip side is also for a demand zone. When you see a demand or supply zone whereby the market left the zone with force, with a high frequency, with high intensity, that zone has tend to have a higher probability of success. If market should return back to that zone, the market is going to sell fast. Let me show you an example of what I mean by that. An example of what I mean by that. Let's see. Let us see. Now, can you see? In this case now, did you see how the candles left so fast? They did not almost overlap. So that is to show that's why when the market just came tapped into the zone, it now sold, because the market did not actually take time to, the candle did not overlap. The candle did not really overlap. It moved so fast away from the zone. Let us look for another applicable example. Let's look for another applicable example where the market moved with high intensity from a zone. Let's see. Let us see. Okay, you can see here as well, this is a zone right here, though however this is a rally, a drop though, but you see that this long candle fast moved so fast. So when the market came back to that zone, it actually sold. So the market did not, there was no overlapping candles. There were no overlapping candles. Instead, you just have candles, long candles formed moving away from the zone. And in that case, that's created a very viable supply zone. All right, created a very viable supply zone right there. Okay, so that is actually it when it comes to the strength of how the market left a particular zone. Like in this case too, you see how the candle left did not almost overlap. The candle left with intensity. So trade zones like this, see here now, there are no much candles formed here. No much candles were formed here. Okay, so better to trade such zones where there are no much. Like this is a very nice, lovely zone. You see how just two candles formed. So should the market come back here, and the market actually did, it just tapped into the zone and it actually bought. Why? Because this zone, few candles, and there was intensity of leaving the zone. There was a high intensity. Fast, the market left the zone. This is a drop based rally. The market left the zone with a high intensity. All right, as against if the market should come to the zone and started wasting time forming a lot of candles, this zone would not have been as effective as this in this case, whereby the market just left. Here you could count maybe up to like 6 to 10 or more candles, but here there are just two candles formed, and hence this has higher probability than this other demand zone. Okay, so another thing that can give you a higher probability demand or supply zone is trend. You had it in the forex market that the trend is your friend. The trend is your friend. So what do we mean? The trend is your friend when it comes to the forex market. Never you trade against the trend. So demand and supply zone, a demand zone formed on an upward trend, which is the same as bullish trend, has a higher probability than a demand zone that is formed on a downward trend. Should I come again? I mean, a demand zone formed on an upward trend or the bullish trend has a higher probability than a demand zone that is formed on a bearish trend. In like manner, a supply zone that is formed on a bearish trend has a higher probability of success than a supply zone that is formed on a bullish trend. All right, so in other words, take buy trades only on a bullish trend and take sell trades only on a bearish trend. Now the fifth criteria or the criterion that you need to think about is the age of the zone. Age of the zone. Now, avoid trading old zones. Avoid trading old zones. Trade only zones that are within the reach of your eye. For example, now you can see my chart. You can see this is my chart. This is my chart. If you cannot see, if you have a zone that is outside your chart, avoid trading those zones. Those zones are not current. That is just a rule of thumb. Now I can trade zones here. I can trade this zone. I can trade this zone. I can trade this. I can trade this zone. When the zone becomes, when you mirror down, when you zoom in, or rather when you zoom out and you see this zone now, see this zone, me trading this zone now, the probability of success of this zone here, this is a demand zone, may not be high. All right, it may not be high because this is an old zone. This is an old zone. This, you can see, this is November. This is November, 2nd of November, and here this is 2nd of November 2022. Here we have still this is April 2023, 10th of April 2020. So you can see the market is here to come to this zone. If the market come to this zone, probability of success of that is quite slim because this is an old zone. So it is better I trade these zones. That is within reach, than for me to want to trade a very low old zone that has stayed so long. It is not good. This has a lower chance of probability of success. All right, so that is it. So that is it. Trade zones within the reach of your view in your chart. Okay, trade zones. If possible, you could zoom. And these are zones, fresh zones. You actually I've zoomed in. This is the first fresh zones you should trade. Can you see this zone? Can you see this zone? These are fresh zones you should trade. These zones just occurred the same month. We are in February. This is February 6th, February 9, February 14, February 17. This is the same month within the same period. But when you zoom out, you see, can you see? These are old zones. Trying to trade this zone, you will not have much probability of success. All right. So the final, but not the least, the last but not the least, in terms of what determines the strength of a zone and hence the probability of success of a zone is just related to the fifth one, the freshness of a zone. Freshness of a zone or mitigation. What do I mean by mitigation? I've done a separate video on mitigation. Mitigation means a zone, testing of a zone. When market comes to test a zone or come to test a supply or demand zone. What do I mean? What I mean is this. Do not trade a demand or supply zone that price have come to test before. For example, now you see this is a zone. I want to draw a zone. This zone, market, this is a zone, rally, base, drop. Now the market came back, tested the zone, okay, and dropped. Market have tested this zone. This is a retest. I should avoid trading this same zone because it's no longer a fresh zone. But if I should have this zone like this, whereby the market is yet to trade, is yet to test, rally, base, drop. Now this is a fresh zone. The market have not come to this zone. So this zone has a higher probability of success than this zone that has been tested before. So the market is expected to come to this zone and do what? And sell. All right. So avoid trading zone that has been previously tested. In the same case, you can see for a demand zone. I just showed you for a supply zone. For a demand zone, you can see the market dropped, formed the base and rallied up. All right, rallied up. This is a fresh zone because the market have not come to this point to test this zone. So I'm expecting that if the market comes back to this zone, it's going to do what? Buy. But in a scenario whereby there is a zone in this form, and let's have it clearly. Scenario whereby you have a zone that is formed and the market rallied up and came back to that zone and bought. Avoid this zone. It has been tested. Should the market come back, it might likely break through the zone and not buy. All right, so this is in contrast to demand and supply, to support and resistance. In support and resistance, the more the market come to test the support or resistance and hold, the more the strength is assumed that support or resistance has. But when it comes to demand and supply zone, the reverse is the case. Trade fresh zones where have not been tested, or trade fresh demand or supply zone that have not been tested. It has higher probability of success than those ones that have been mitigated. It's called mitigation. Is mitigation or testing. Okay, when the market have come to test a zone or mitigate a zone, that zone loses strength. The zone loses strength. So best trade a zone that is fresh. Trade zones that are fresh. Trade zones that are fresh. Let me give you an example. You can see now this is a zone. This is a zone. Okay, this is a zone. The market came back, tested this zone. The market came back again, tested this zone. Now, when the market came back another time to test this same zone, it's actually bought. So avoid zones that are not fresh. Avoid zones that are not fresh. Avoid zones that are not fresh. It is not good. It may not give you the best probability that you actually want. All right, so that is this for this video. So today we talked about the best supply and demand zones you should trade. That is to say, the best supply and demand zones that have the higher probability of success that you should actually trade. All right, so if you're yet to subscribe to this channel, please kindly do so and turn on the notification bell so that you can be alerted when I post new videos. And if you're yet to join our Telegram channel, the link to that Telegram channel is in the description box of this video and also at the profile section of this YouTube channel. If you want me to mentor you by the hand, take you by the hand until you become a successful forex trader, one-on-one mentorship, you can reach me. My contact detail is in our free Telegram channel. You'll find my contact detail there. I do a subsidized one-on-one mentorship, train you on forex trading until you become a good and a profitable forex trader. And why do I do one-on-one mentorship? I do one-on-one mentorship because I believe that different individuals have different assimilation and comprehension rate. Okay, different learning curve. So I am patient with you until you become you learn what you are supposed to learn and you become good. You make your mistakes. I am patient with you to grow and to become good in forex trading when I train you at my mentorship course. All right, so do feel free to contact me. The contact details is in the Telegram channel, and the link to the Telegram channel is in the description box of this video. So till I come your way next time, I want to wish you the best in your forex trading, and do not give up, continue to succeed, and do excel in all you do. Goodbye.